In my last video, I mentioned the volatility in the Nasdaq, and this week was no different with more mega cap tech earnings this week. We said that any rally in the Nasdaq would be a relief rally if it cannot reclaim 15,330. This week, we've seen price rebound thanks to strong earnings from Google parent Alphabet and Amazon. Offset this, however, on Wednesday evening was Facebook when it reported its earnings, and it missed expectations, especially forward guidance, which worried investors that they forecast a slowdown in revenue growth. Now, if we have a look at the daily chart of the Nasdaq 100, we can see that price hit the high of 15,276 before coming off sharply. Now, I'll reiterate that as long as price is below that 15,330 to 350 area, the Nasdaq is just backtesting its breakout, which you can see here as price collapsed below the 200-day moving average. If we use Fibonacci retracement levels, because what we've had this week is a mean reverting rally after the Nasdaq fell 18.2% from its all-time high set in November last year to the recent low. Price has retraced 50% of that fall from its all-time high as highlighted here. You can see the 50% level at 15,238 acting as resistance. We're now bouncing around between the 23.6 and 38.2 levels, with the 23.6% level acting as support and the 38.2% level acting as resistance. If you'd like to know more about Fibonacci and how to incorporate that in your trading, check out my video on this with the link in the description box below. Now, another concern for the bulls is if you look at the shorter term moving averages, like the 20-day and 40-day, you can see here in the chart, both moving averages are beginning to point lower, which could signal further selling to come. In terms of the downside levels to watch, the 23.6% Fibonacci level around 14,400 will act as immediate support. Now, the bias remains to the downside purely based on the fact that price has not recaptured key levels. The likelihood is if we get another test of that 14,400 level, we'll see price breaking down and heading towards that recent low, and that will be that key test around 13,680 to 720. Now, if that area holds, we could be looking at another snapback rally, else the selling accelerates and we get another flush towards 13K. Now, I also spoke about the US Fang Stocks in my last video and how important that group of companies are to the Nasdaq 100. The Nasdaq has been driven by mega cap tech earnings. First, we had Netflix reporting a slowdown in subscriber growth, which saw a 20% nosedive in its share price, and you can see that in yellow on this chart. Both Microsoft and Apple's stock reaction to earnings has been much more muted, even though both reported solid earning reports that beat analyst expectations. The only outperformers of the big tech names were Google and Amazon, which you can see here with their respective stock prices spiking on earnings. More recently this week, we had Facebook earnings, which missed earnings and forecast revenue below expectations. And you can see from this chart, Facebook shares fell by 25% in a single day. Now, out of the 6 tech companies that I have on this chart, 2 of them have slid 20% or more, and 1 has rallied 15%. This kind of volatility we're seeing in mega cap tech stocks shows that we're seeing a de-risking event as money comes out of these names. This is why you're seeing this breakdown in this US Fang chart and why bears are firmly in control of the Nasdaq 100. As I mentioned previously, these 6 companies alone account for 43.26% of the Nasdaq 100. So 20% moves in these names is going to move the needle on the Nasdaq 100. So in summary, my key takeaways are: 1. Continue to watch these 6 names closely. If they find a bottom, the Nasdaq 100 bottom is likely to not be too far. Number 2, 15,330 to 350 on the Nasdaq 100. Stay below and the seller's in control. Get above and we squeeze much higher. And 3, downside levels to watch: 14,400, which is the 23.6% fib level, and the recent low 13,680 to 720. They're the key levels to watch on the downside. With that said, thanks for watching. Remember to hit that subscribe button so you don't miss future videos, and I'll see you at the next one.